Welcome to the show. Super excited for you to be here. And we're going to be talking about one of my favorite topics of all time, which is investing. The reason why I love this topic is because there's so much of that messaging like out in the personal finance world, like make money work for you, make money in your sleep and blah, blah. And a lot of people hear that and automatically think like fucking scam. But investing is actually probably one of the oldest ways that is actually realistic. It's actually doable. It's actually how people are building wealth. And so I'm so excited to like break down this topic and really encourage people to maybe stop being afraid of this, because everybody's okay with like buying lottery tickets and scratch offs, but like you're probably going to be way more successful investing than doing any of the other shit that you've seen like your friends and family do.
Yes, it's totally true. And I also love this topic because I invest in a lot of different things. I'm a business owner now. And people ask me all the time, what's your favorite way to invest? And my favorite way to invest is super simple stock market investing. And I know that can sound scary, and we'll get into different ways that you can make that really easy for yourself. But that is still and will always be my favorite way, because it really can become a set it and forget it automated way to build wealth. There are other ways to build passive income, but a lot of them take a lot of work up front. I mean, you've built an incredible business and you do have some passive income streams now, but they don't start that way off the jump. And that's the difference between really simple, accessible stock market investing. So I'm thrilled to talk about this.
Yeah, absolutely. You know, passive income is one of those sexy terms that people it's like, wow, this sounds great, but like, what does this actually mean? And to break it down very rudimentary, it's like, there's two ways to make passive income. You either buy things that can earn you passive income, or you have to build things that earn you passive income. And so when we're talking about investments, we're talking about investing in companies that have already done the legwork of building economic engines and abilities to like monetize, and then we're kind of just profiting off of that. So if you have been wanting to invest, but you are overwhelmed with the options, you're overwhelmed with how to start, we're going to have a conversation that hopefully by the end of this leaves you feeling much more confident and empowered. So I want to start off with your own journey, Tess. Take me back to childhood. Did you learn about investing growing up?
I did not. I did not learn about investing growing up. I did learn how important it was to have your own money. There was a lot of turnover in my family. My parents got divorced very young. And so I saw a lot of instability. And I think that made me really aware of money as a tool for safety. So when I started making babysitting money, I would hide it places. My mom said she would find money hidden like all over my room. So I definitely started with a relationship with money that was steeped in fear. I also had a really interesting binary experience where my mother, who's white, she was very conservative with money, very nervous about money. And my father, who's Puerto Rican, he spent money all the time. And I grew up thinking that we were poor. I lived with my mother, and my father was rich because he had Louis Vuitton and Cartier and he drove a Mercedes. Fast forward, now I realize it was actually the opposite. Wealth is what you don't see. And so now, unfortunately, he's in a really tough financial position. But at the time growing up, I thought, I want to have that. I want to be able to spend money. I want to be able to have financial security and buy whatever I want. And what I realized is that you can buy anything, but not everything. And it was a really interesting experience for me growing up like that, because it totally flipped my world upside down. So no, I didn't learn about investing until my 20s. And I actually learned about investing because I made some huge financial mistakes that sort of forced me to learn in my 20s. So we can get more into that. And I'm happy to share some of the mistakes I made and help people avoid them. But the truth is that I got into focusing on personal finance because I was afraid, because I wanted to have options, because I didn't want to end up like my mother and being in a situation where she really was trying to meet someone to help take care of us. And I didn't want to grow up that way. So.
Mm-hmm. You know, it's funny because I find that when I talk to a lot of my community, which is primarily like minority communities, there is this perception that we have to show off our quote unquote success. And a lot of times that looks like what you were talking about your dad was doing, is just like buying the things, showing that you're successful. Meanwhile, people are up to their eyeballs in debt and have literally nothing of concrete value to show for all of their hard work. And it's interesting because I actually polled my audience a couple days ago, and 50% of them claim to be addicted to spending. And I'm like, oh shit, y'all. Like, what is happening here? That's a crazy number. But I think honestly, as somebody who is really like interested in the relationship between mental health and money, I feel like a lot of times the spending addiction is hiding something. It's masking some mental health stuff that needs to be addressed. You probably need therapy, y'all. Like that's just real shit because oftentimes we use money the same way that other people can use like food or drugs or sex or whatever. Like it's trying to fill some gap in your life. And so if you find yourself in that spending addiction cycle, you have to start trying to get to the root of like, why are you doing this? Why do you feel this need to spend? Are you trying to get validation? Are you trying to fill some void? Oftentimes it's not just as simple as like, I'm just a spender. Like there's things underneath this that we need to address if it's going to be a realistic change that you make in your life.
100%. I couldn't agree more. And I've thought about this actually in my father's case, why he did this. And I really do think he grew up in the shadow of an older brother that was really successful, went into the Air Force. His father was very abusive to him. So I think that in his own way, this was a way for him to show that he was successful. And unfortunately, it really backfired. And now he's in a very difficult financial situation well into his 70s. And so what I think really changed everything for me, because at first when I started to focus on personal finance in my 20s and realized that I really wanted to make as much money as possible so I had flexibility and I could buy the nice things, what I realized is that the more I invested and the more I spent my money on, like you said, buying things that make me money, like investing in the stock market and investing my money in assets, I realized that's going to give me the flexibility to buy whatever I want in the future if I make that choice now. And now I don't care about any of that stuff. Like I have no desire for luxury items at this point because what I have now is financial flexibility and options, and you just cannot put a price on that.
Yeah, I like the definition of wealth being the ability to make choices. That's really like what I've experienced as true wealth is just being able to opt out of the bullshit, whether it's a toxic job or an environment that is no longer serving you or a relationship that is draining you. Like there is nothing more wealthy than being able to say, hail to the nah, I am not entertaining this anymore. And knowing that like your
Yes.
finances are not going to be the reason why you have to stay stuck in these situations.
I couldn't agree more. The amount of students that I work with that I find out later, I teach investing and I teach beginner personal finance. And a lot of times I find out later that their goal isn't necessarily to buy the car or the house. Their goal is to walk away from the toxic job or walk away from the relationship, right? And that's the power in focusing on your money and learning to invest. It's not so you can buy things, it's so you can buy those options, like you said.
Mm-hmm. I love it. Okay, so you mentioned you made some mistakes before you actually found your footing and were able to build over $1 million net worth in your 30s. So take us back. Take us back to the mistakes because I think a lot of folks are afraid to start investing because they're afraid they're going to make a mistake.
Yes. So my biggest mistake was not getting a basic education, and I'll dive into why. And when I say basic, I mean very basic, like things you could learn in a couple hours of focused energy. And so when I went into my 20s and I couldn't find a job, I got rejected from every job, and I ended up with this wonderful job as an aerial acrobat on cruise ships. So I literally ended up running to join the circus. And this happened because I graduated university into a recession. So it was like 2010, I got rejected from everything. And then I end up with this wild job on cruise ships. And this job ended up being amazing because I was able to save so much money. We had a crew bar and drinks were $1, but it wasn't easy to save money on the ship. And I thought, this is my chance to never end up in a situation that I can't get out of because I don't have enough money saved. So that's when I started saving money. And when I eventually left the cruise ships, I had a chunk of cash that I was really excited about. And I had learned enough to know that I wanted to put that money to work for me. I wanted to invest that so that money could grow. And instead of learning a little bit about different options for investing, I hired the first person that I knew that was near me to be my financial advisor. And this was somebody that was a few years older than me in school. I didn't know her that well, but she was a friend of a friend. And I thought, perfect, that's got to be a great option for me. And unfortunately, what ended up happening over the course of several years is that this person sold me a financial product that wasn't suited for me at all. So $20,000 of my money is completely locked up until I'm in my 60s. So I can't make money from that. It's just completely locked up in an annuity, which is basically a way to create your own pension. So for those of you that don't know what that is, it's a financial product that can be valuable, but for a lot of people, it doesn't necessarily make sense. And in my situation, it certainly didn't. So I agreed to that. I was also paying exorbitant fees in terms of not just paying this person to, quote, manage my investments, which it turns out they weren't doing much of anything, but also I was paying fees because the investments they were choosing for me were super, super high in fees. So all in, this is tens of thousands of dollars that I've either lost access to or paid in fees very early on in my investing. And I was really devastated when I figured this out because my whole goal had been to have the flexibility and the options and to do the right thing by hiring someone that was smarter than me, or so I thought. And so there was a lot of shame wrapped up in that for a long time. And then once I sort of picked myself off the floor and stopped feeling bad for myself, I thought, okay, there has to be a better way to do this. So I'm going to start learning the basics. And I picked up one book, A Simple Path to Wealth, which is a great book if you haven't read it. And it explained a super simple way to invest that is super low in fees that anyone could learn how to do. And it wasn't a super jargony book. It was pretty easy to read. And it blew my mind. This one book. So a couple hours of my time, it's not even a very long book, but a couple hours of my time made me realize that, oh my gosh, there is such a better way to do this where I can get better returns. I don't have to put any effort into this type of investing. And it completely changed my life. And I thought, everyone needs to know this. And so that was in my mid-20s. And since then, now I've spent hours and hours and hours reading all different kinds of investing. And now I invest in real estate and I do angel investing and I do all different kinds of investing. But I still enjoy the super simple stock market investing because it's so easy once you learn the basics and once you realize that you don't need to time the stock market. You don't need to pick stocks. You don't need a lot of money to start. You can start with $5 if that's all you have. It's just an incredible way to invest. And I know it kind of, if you don't know the basics of investing, it can sound crazy that this is a thing, but it really is possible for anyone to learn this. And so now at this point, I just feel morally obligated to share about it.
Yeah, so it sounds like you were bamboozled by a salesperson versus an actual like fiduciary financial advisor who is supposed to act on behalf of their client's best interest.
Well, she was actually a fiduciary.
Oh, I hope she's lost her license to practice at this point because that's crazy.
So unfortunately, I will add one more cautionary note to that story in that as a financial educator now, I've worked with a lot of women that have a relationship with a financial advisor that they're wanting to leave for a variety of reasons. And unfortunately, a lot of the times they do have better options. And so I help them find those better options, whether it's finding somebody else or doing it themselves. And I agree that a fiduciary is super important. However, a lot of fiduciaries also have sales licenses. So they can act in one way as a fiduciary and another way as a salesperson. So just having a fiduciary, or if someone says, oh, I'm a CFP, a certified financial planner, that is a great designation. And there are wonderful CFPs out there, but not all of them, even the fiduciaries. So I think even if you're someone that says, I'm just going to go learn how to do that, or I'm just going to outsource this and I'm going to find a fiduciary and never look at what they're doing, I would say that is a mistake. There's a possibility they could be great, but I've seen a lot of situations where they aren't. And so what I love to do now is to help my students learn what to look for. A lot of them end up doing it themselves, and we'll talk about easy ways that you can do that. But some of them aren't comfortable, but now they know how to pick someone great and the options they have that are affordable. And so regardless of what path you're choosing, really important to get a basic education.
I'm curious, how did you kind of figure out that something was up?
So I actually started investing in real estate roughly around the same time. And I bought a very small single family house in a bad part of Tampa. So I couldn't afford anything. I grew up in New England. So New England is very expensive. I couldn't afford anything there. So I flew all the way to Florida and I bought a very small single family house in a bad part of town, which, to be totally honest, I lucked out. I should have done more research. Now it's an okay part of town, but it wasn't back then. This is maybe 12 years ago now. And so when that happened, I started paying a lot more attention to the returns and what I was investing in that house. And honestly, it was a big mistake. I didn't get a proper inspection. I learned to talk about lessons. We could spend all day talking about all the mistakes I've made. But anyway, so I learned a lot from that investment property. But while I was starting to do the math and project out what that could look like in the future, I realized that I wanted to learn more about my investments. So when I dove in, I Googled like average return of the stock market, and I saw, okay, it's roughly, 10% on average. And I'm looking at my portfolio and I'm getting about 5, maybe 6% in like really good years. And so at this time, when I started, the time period I was looking at was actually from 2010 to 2015, which is after we had a massive global market meltdown in 2008. We went into a recession. So the stock market was really strong during that time. And my returns were so low. And so that's when I started asking around. And fortunately, I had a wonderful boyfriend at the time, someone I'm still very grateful. We're not together anymore, but super grateful for him. And I started talking to him about this. And he knew enough to say, I think there's better ways to do it. And he wasn't an expert. He just knew a little bit. And honestly, this was maybe in 10 minutes, I figured this out. And then I talked to him for 20, and it changed my entire life. So the other piece of this that I think is an important takeaway is normalizing money conversations. Like, I'm so glad that I brought it up with him, because if I had just figured it out myself, I probably would have still been overwhelmed and not really done anything about it. I would have assumed that maybe I'm wrong and I just don't understand the returns of the stock market. Like, who am I? I don't have a finance degree, So I'm very grateful that I had someone around me that knew the basics. And so I think as you're building out your network, whether you're a business owner or you work in corporate, whatever it is, it's so valuable to start to connect with people and to have these conversations, because you never know what you might find out. And that 20-minute conversation changed everything.
Yeah, absolutely. And I think it comes back to like the importance of having that foundational education, right? Because when you dive into these scenarios and you don't necessarily have like all of the information that would help you be a confident investor, that would like help you identify red flags in the beginning, that's when it's very easy to be taken advantage of, right? And so I had this same experience with my own mom. They had a financial advisor, quote unquote, walk into her office, propose all these like bullshit products to people, ended up putting her in an annuity. I had to get involved to get on the phone with him. He's like, who the hell are you? Why are you questioning what I'm doing? I'm a professional. I'm like, sir, you're a fucking scammer. Let's be honest. I need my mom out of this ASAP. I'm not even trying to entertain this conversation, right? But like, if she didn't have me to be her advocate, she would have just been paying into this shit for decades and being taken advantage of. And so this is the power of financial literacy, y'all. This is why it's so important for you to not skimp on the education piece, because this is the thing that arms you with the information that you need to really advocate for yourself.
Absolutely. And it doesn't have to be complex education. When we say education, we're talking about a book or a podcast or taking a couple $100 course online about investing basics. You don't have to be, I love this example. There's another, I have to give her full credit for this. Do you know Shannon Weinstein?
Yes.
She's a CPA.
She used to be my accountant.
Yeah. Okay. So she's like the metaphor queen. And one of the metaphors that I have to give her full credit for is she talked about how you don't have to be a mechanic to drive a car, and investing is the same way. You don't need to know the inner workings of every piece of the engine to get your driver's license and be able to drive safely and follow road signs. And I think that's a pretty good parallel to what we think about investing. We think about all this jargon and we need to learn all these different pieces of the machine and the engine and how it works. And really, if you learn the basics, you can go really, really far. You just need a little bit of time and energy towards it.
All right, so let's dive into those basics. How do we actually start investing? Like, what is the most accessible entry point for people to get involved?
So the very first thing I would say is that a lot of people already have an account that they're not really thinking of as an investment. So if you have ever had a job where you had a 401k or a 403b or a 457, all of those are retirement accounts, and we call them retirement accounts, but they are actually an investing account. When you're contributing money to those things, those are accounts that give you exposure to the stock market. And all the time I'll go in and I'll do speaking and I'll ask, who here is an investor? And no one will raise their hand. And then I'll ask, who has a 401k? And everyone raises their hands. And I say, okay, actually, all of you are already investing, whether you realize it or not. So one of the easiest ways to get started, especially with investing, because there's so many different topics you can get into that can make it really overwhelming, is to master what you already have. So if you have a 401k, even if you only have $2,000 in it, or an IRA, again, even if you only have a couple bucks in it, if you have any kind of account like that, you're already investing. And so learning the basics of how that account helps you save on taxes and how that money is invested can be a really helpful place to start. So I just want to say that off the bat. You might already be investing, first of all. And if you are, good for you. Like, you're already doing it. So that's great. The second thing, once you've sort of realized that you might already be doing this, if you're not investing at all yet, before you even start to look into opening investing accounts and figuring out which ones are going to be the right fit for you, you want to understand your cash flow, how money comes in and out of your life. The most important piece of this is going to be to make sure that you have enough money to contribute in the first place. And so making sure if you have high interest credit card debt, that's debt that you're going to want to get rid of. And when I say high interest, I would say anything over 7-ish, 8%. That's debt that you want to pay off as soon as possible. But once you've paid that off and you have a little bit of savings, you can start investing with $10 a month if you have. That's all you have. And I recommend you do that if that's all you have. And some people will say, oh, it's not worth it. It's such a small amount of money. But the power in setting an intention to learn the basics and decide on an amount of money that you want to invest in your future is the single most important decision you can make when it comes to investing. That's really where you want to start. Because a lot of times people will say, oh, I want to go invest. How much should I be investing? The answer to that really depends on your current life, what you have going on, what your expenses are, if you have debt, all that stuff. So figuring out how money comes in and out of your life and how much you can start with is going to be the very first step. And then once you've done that, once let's say you've done the exercise, you know your cash flow, and you've said, okay, I can just, as an example, let's say $100, I'm comfortable investing $100 extra. Maybe you're already contributing to another 401k, but you have $100 and you want to start investing it, and that's what you're comfortable with. The next step is to decide what type of account you want to open. So there are different types of accounts, and this can feel so overwhelming because you hear all these acronyms like IRA, 401k, 457, SEP, and there's so much. At the end of the day, there's really two buckets of accounts that we can really simplify this with. There's accounts that help you save on taxes, and then there's a regular investing account that doesn't help you save on taxes. And so any of the acronyms that you hear, IRA, 401k, all of those, simply put, are different ways to help you save on taxes, which is great, right? We want to grow our money and save on taxes. So if you are investing with the intention of having money for future you in retirement, choosing one of those accounts can be a great place to start. So before you even get into the investing, the first couple steps are figuring out how much you can invest based on your cash flow. And you don't have to be perfect with that. Like I said, just getting started, just deciding that you're going to invest a certain amount every single month is a perfect place to begin. And then you want to figure out what type of container you want to put that in. So it can be an account that helps you save on taxes, or an account that doesn't help you save on taxes, but could still help you invest. And so those are the first two steps. And then the third step, and this is where everyone gets very overwhelmed, is then you have to choose investments. So inside these accounts, your IRA, your 401k, they're just containers for your investments. They're not investments in themselves, right? They're containers that, in the very simplified explanation that I'm giving you, they either help you save on taxes in one way or another, or they don't. And so because they're just containers, you have to make sure that once you've contributed money to these types of accounts, that they're actually invested in something. And this is where everyone gets super nervous about, I don't want to have to pick investments, or how am I going to do this right? There are so many ways that you could invest without ever having to choose an investment that are very, very simple. So One of my favorite ways to invest, and I teach this to students all the time when they're overwhelmed and they want to get started, is to choose what's called a robo-advisor. So a robo-advisor is a place. So Fidelity has these, Ellevest. These are some examples of brokerages. Brokerage is just a place where you can open these types of accounts and buy and sell investments. So there are some brokerages that have what's called a robo-advisor. And how this works is once you've chosen your account, let's say you've chosen a Roth IRA, that's what you want to invest in. They'll ask you a series of questions based on your investing goals, based on your horizon until you retire, and probably a few other things, what you care about. And then they'll choose a very simple investment portfolio for you. And a lot of times these portfolios are super low in fees. So if you are somebody that wants to start investing, but you're super overwhelmed, a robo-advisor is such a good option because it gives you a really quick place to start. And then once they've chosen the investments for you, if you want to learn more, you can Google those and see, okay, like what is this? What is my money invested in? But if you're panicked about choosing in the first place, you don't have to do that. And you shouldn't feel bad about that. I give you a permission slip not to feel bad about that because I work with so many intelligent, talented women. I was just working with a surgeon. She does in crazy like brain surgery. And she was so nervous about choosing her own investments. And when I told her there's this other path where you don't have to pay a financial advisor an arm and a leg, you don't have to pay them 1%, which can be a lot of money, but you can use a robo-advisor that will choose investments for you. She was like, oh, thank God, because I'm busy doing brain surgery. Like, I don't have time for this, right? She's a big deal. So just to like give you a permission slip for that, like that can be a really great way to invest. And then you can learn more as you go. So that's one way. And then some other ways, if you want to choose your own investments, there are also simple investments that are basically like package deals. So the variety pack of investing, right? So you can invest in funds that are called target date funds or life cycle funds. And basically, this is a package of stocks and bonds that's created for you that you can invest in. And over time, it'll adjust towards a specific date that you think you're going to retire. And it'll adjust to help you manage the market, and not to get too granular here. But basically, you're investing in a package deal that's going to adjust over time to your retirement target date as it should. So those are two ways that you can get started with investing that are super, super simple, that are in your control, that don't require you to hire a financial advisor if that's something you aren't interested in. And a lot of people don't want to do that, and that's fine. So I think that when we think investing, we think, oh, I have to time the stock market. Oh, I have to pick the right stocks. And what we know about the stock market is that over time, the stock market goes up, but it's not linear. And so if we are trying to time the stock market and invest in a certain time, it can be really difficult to make sure you're getting a good return because nobody can time the stock market. So instead of worrying about that, instead of worrying about picking the right stocks, you can have someone else pick them for you, or you can choose the variety pack, and then that number that you chose in the beginning of this piece, that number you chose to invest, you put that in there every month. And now you're investing. And that's all you have to do to start. And then if you're excited and you want to learn more and eventually you want to choose your own investments, that's great. But I would say this is, if I could leave everyone listening with one piece of advice, do this now. You don't have to learn everything about investing. If the sooner you start, the sooner you're going to start to benefit from compound interest and your money growing. So these are two avenues that I think are really accessible to people and can feel overwhelming, but I would really encourage you to explore robo-advisors or target date funds if you're overwhelmed about okay, I have money, but I don't know what to invest it in. Both of those are great places to start.
Yeah, that third step that you're talking about, I think that's the thing that a lot of people miss. And then they look at their accounts after a year or two and they're just like, well, nothing's happening. And so the problem is that when you're not actually picking investments, you're using your investment account as a bank account, basically. It's just holding funds that are waiting to be deployed. So it really is important to take that third step. And for me, the target date funds is actually how I started investing, because I didn't understand like what the hell all this jargon, these definitions, growth, value, stocks, international, blah, blah, blah. Like there's all these definitions that we don't know. And I think half of the battle with investing is just understanding that it's a completely new language. And that's why when I wrote the chapter on investing in my book, I literally start off the chapter with like 50 definitions, just so that you understand like, what the hell is a stock? What is a bond? Like, what is capital gains? Because it's a foreign language for most of us. And until you feel confident understanding of what this stuff means, it's going to be hard for you to make those decisions. But a target date fund is very like self-explanatory. You know, I saw the description. It said for people who want to retire around 2050. And I did some calculations. I'm like, I'm this age, blah, blah. Okay. That makes sense, right? And then you can get to more complex investments, more granular stuff as you go about it. But for most of us, we really don't need to be getting in the weeds. You just need to start getting your money working. And then as you become more proficient, now I know what the difference is between a total stock market fund versus an S&P 500 fund or a real estate investment trust fund. Like, it takes time, essentially.
It absolutely takes time. And I think that that's one of the pieces that I try to encourage women all the time, because I think we have a tendency to want to do it right. And so we want to invest in the very perfect right thing for us. And the truth is there's no perfect way to go about this because nobody really knows what's going to happen in the stock market. So the best way to invest anyway is in these funds that have a bunch of different stocks and a bunch of different bonds. And basically we're saying, we don't know what's going to happen. So we're going to invest in everything. And the nicest thing about that is in this day and age, there are automatic systems that will do that for you, like a robo-advisor. When they choose an account for you, when they choose a few funds for you to invest in, that's what they're doing. They're choosing a bunch of different stocks and a bunch of different bonds so that you don't have to worry about that. And they're choosing a bunch of different ones so that you're not invested in one specific company and are going to lose all your money, right? So these robo-advisors and these target date funds are so sophisticated now that they are very likely outperforming some fancier strategies that people are trying to do too. So I try to tell people all the time that it's not necessarily about the amount of funds you have or what you know, because the truth is we don't really know exactly what the stock market is going to look like in the future. But we do know that over time it goes up, and these vehicles can be super simple ways to invest. And it is so much better to choose Fidelity, or Ellevest is a great like women-owned platform. It's super cool. You can open up an account. You could do this in 20 minutes. If you decided I have $50, I actually don't even know what account I want to invest it in. You could open up an account, fill out the questionnaire, and automatically be putting that $50 into a set of funds they choose for you. You could do that in like an hour. And if that's what you start with, that is so much better than nothing. So again, we started with talking about education, the power of one book, listening to your podcast a bit more, reading your book. Like, you have a whole amazing chapter on investing. Like, everyone go get her book and read that chapter. Like that's going to help you so much get started.
That's it. All right. So for folks who work in corporate or in the public sector, they have access to things like 401ks, 403bs, et cetera. What about if you're self-employed or you're a stay-at-home parent? Do you still have the opportunity to invest?
Absolutely. So if you are self-employed, there are a couple different account types that some of them, like I said, there's sort of the two categories. Some of them help you save on taxes and some of them don't. And so as a business owner, you have a super unique opportunity to save on taxes and start to invest. And so there's a few different ways that you can do that. Roth IRA is a very simple, great account, great fit for a lot of people. IRA stands for individual retirement account. And so that type of account doesn't necessarily help you save on taxes now, but over time, as your money grows, you don't have to pay taxes on the growth inside that account. So people love a Roth IRA. That's a great place to start. Depending on your income, you may or may not be able to contribute. So if your income's too high, you can't contribute directly to a Roth IRA. But for the vast majority of people, that's a great place to start. Another option for people that are self-employed is something like a SEP IRA, SEP. And that IRA is for anyone that has self-employment income. You can contribute money to that, and then you get to reduce the amount of income that you are sharing on your taxes by how much you contributed. So this is the super cool thing that I love. You're saving on taxes as a business owner, and you're putting your money away in an account that's going to grow and over time. So you're saving money now on taxes and you're setting up your money to grow. Two birds, one stone. So those accounts are amazing. And there's always regular investing accounts, regardless of how you're invested. Now, if you're a stay-at-home parent, if you have any kind of income, you can contribute to an individual retirement account. You just need earned income of some kind. But if you're married and you don't have that income, you can actually contribute to a spousal IRA. And so a lot of people don't know that that exists, but that is a great way that you can have your own retirement account if you're a stay-at-home mom doing probably like the toughest job out there as a non-parent. I have no idea how people manage. There's so many amazing business owners that are crushing it as a mom, and they should be well compensated. I think, do you know the study that said, if we paid moms what they should be paid, they should be making like $180,000. I think it's something like
absolutely.
that.
And I feel like it needs to be more.
Yeah, it probably should be more. So let's say 200. We're going to round it up here for 200. But if you're not actually receiving that money and you are managing the household and your partner is out, you can, if you're married, you can contribute to a spousal IRA as well. So you can have your own investing account in that situation.
And you absolutely must, y'all, because let's be honest, at the end of the day, we have idyllic versions of what our relationships are going to be like. But I've seen so many horror stories of especially women who give up their earning potential to become stay-at-home moms, don't work for a decade or two, and then, God forbid, you get divorced, you have nothing to call your own, you have no retirement plan. And oftentimes women end up in poverty because of divorce. And so having those conversations with your spouse, if you are a single income household, is a must. It is not something to shy away from because your financial security matters.
Yes. And I will double tap that and add that even though you're not making the money, you should not just have your own account, but understand how all your accounts work and what's in them. And I have worked with, I think a lot of the women that I end up working with, they're in transition. That is usually a time when you start focusing on your finances. So they switch jobs and they want to figure out how to invest their 401k, or they're getting a divorce, which is very common and usually a catalyst for learning about money. I would urge you to not wait until that time because, one, that's just such a emotional time, psychologically so difficult. The last thing you want to be doing is trying to figure out your finances. But you have to be really careful because if you don't know what's happening, it can be very easy for you to not get what you deserve if you've been supporting this household. And I've seen it over and over and over. So if you are single income household and you stay at home and your partner has a 401k, you should know how much is in that. And you should know how much is invested in that. And especially if you have kids, you should know the basics so that you can teach them the basics. I think we talk a lot about generational wealth. And one of the things that I think is often overlooked is, yes, of course, it's great to save money for your kids. But if you don't have that kind of money and you can learn the basics yourself and teach them a little bit about these accounts and just the concept of investing, that is such a huge gift, a bigger gift than money, I would argue, because that's a skill that they can repeat over and over. So for all those reasons, even if you are not technically bringing in income, you should have complete clarity on what's in these accounts, learn the basics of how they're invested for you, for your future, and for any children you might have.
Absolutely. Okay. What if you get someone who says, Tess, this all sounds fabulous, but like I literally don't have money to invest. What's your best advice for them?
So the first thing I would say is to go back to that cash flow analysis. I would want to know very clearly how much you are making and how much you're spending. And if you're spending more than you're making, then you're right. You don't have enough money to invest. And I say all this with a massive amount of empathy. We live in a time where housing is very expensive and a lot of people are dealing with incredible amounts of debt from school. And so it's not necessarily easy to find that space between how much you're making and how much you are spending. But a lot of the time, there are areas where you can make a change that can create that gap for you. So there is a possibility that you're not making enough money. If you truly are just spending money on your expenses, you're not enjoying your life, it might be an income issue. There might need to be a hard conversation about finding another career path or adding to your existing career path to make more money. Unfortunately, there's no magic solution. You have to make more than you spend. That's the only way that you're going to have enough to invest. So making more money could be one way, but looking at your expenses could be another. And for many people, there are some changes that they can make that they can start investing. Maybe it's not hundreds of dollars. Maybe they're not like, oh, great, now I have an extra $1,000 to invest every month. Maybe it's not that, but maybe it starts small. And that also leads me to one thing we haven't talked about that's really important when it comes to investing is getting really clear on your goals and what you want. So if your goal is to retire comfortably and you don't want to work until you're dead, but you're telling me you can't invest and you have an $800 car payment, I'm going to ask you, what's more important to you? Whatever it is, that G-Wagon right now, or potentially trading that in, getting a used car, saving yourself $300-$400 and putting that towards your retirement, right? So as we said before, you can buy anything, but you can't buy everything, and deciding what's most important to you. Like for me, I decided very early that options are my number one goal. And that's why I built the wealth that I have now, because I wanted the option to do whatever I want. And now what I want to do is help women have all the money. That's my goal. But that's why I did that. Options were more important than cars. They were more important than a fancy house. Options was the number one thing that I wanted. And every decision I made was against that goal. And now that I've achieved that goal to some degree, it's a little bit different. But at that time, that's really what it was. So I would urge you to really think about, look at your spending, look at your expenses. And I'm not saying it's easy. It's super tough out there, right? Like, I don't want to sit here and say like, oh, it's like super easy to find space to invest. It's not. It's just not. But usually when I work with students, there are changes that can be made that create that space.
Mm-hmm. Yeah, everybody that I've spoken to that has been successfully able to achieve financial independence has understood that there is going to be a period of short-term sacrifices that are then going to be the launch pad that sets you up for success. So whether that is like downsizing your home or getting rid of a car and becoming a one-car household versus a two-car household, cooking more at home, side hustling, like just looking for opportunities to increase that gap between what you spend and what you earn, that doesn't have to be your existence forever. And when you have that understanding that this 2 to 3 to 5 year period that I'm going to be focusing on, that is then going to set me up for decades of being able to like not obsess about the numbers and being able to walk into the grocery store and not have to worry about what the tab is, or ordering whatever appetizer I want at lunch, or booking a random flight, or taking a sabbatical from work. Like, you gotta understand that none of this shit happens because it just miraculously appeared for you one day. It takes intentionality, it takes decisiveness, and it does take short-term sacrifice for the long-term goal.
Totally. I think that is so important. And I love that idea of 3 to 5 years can change everything for you. And that's what I did. After I realized that I had this experience with this financial advisor, I felt like I wanted to catch up as fast as possible. And I had at the time bought a nice condo, a 2-bedroom condo for myself, because I thought that's what success meant and that's what I wanted. And I could afford it, but it was tight. I was spending a lot on housing, and I lived in Massachusetts. It's very expensive where I live. And so what I decided after I figured all that out was, if I get a roommate, even though I don't want one, if I get a roommate, that is $1,100 every month. That is so much easier than counting every penny and not save. Like, you could save on coffee, or I can have this person live here. And thankfully she was awesome. And that was a sacrifice. And a lot of people thought I was crazy because I was in my late 20s. I had a decent career now. And they were like, why would you get a roommate? You already bought this condo. And I was able to buy that condo because of my first real estate investment. But I realized it's not worth it for me to spend, I think the mortgage was like $2,300 when I can split this with somebody. It gave me so much freedom. And I was able to invest thousands more in a pretty short time period because of that decision. So those are the decisions that I made that were life-changing, that I don't regret at all. And those are the kinds of things that can make the big difference. You know, you can cancel all the subscriptions you want, but if you downsize or get a roommate or trade in your car for something else, those are the things that can really move the needle faster if your goal is to get to that financial optionality quicker.
Yeah. I love it. Okay. For the folks who are first generation wealth builders who want to set themselves up for financial success, but also feel this pressure of potentially having to provide financial support to loved ones, caretakers, family, etc., what's your best advice on kind of balancing your own investing goals and dreams versus like knowing that you have to potentially plan to support extended family?
This is so tough. There's not one right way to do this. I would say that having those open conversations and getting really clear on exactly what you need to be fulfilled and what your life needs to look like, and then what level you're willing to go to with your family, and creating potentially some boundaries around that or creative solutions, that's going to be the most helpful. I think the key here is communication and open conversation about what does everyone want, what does everyone need, and how can you work that into your life. This is not an easy situation, and it's depending on your relationship too. You might have different feelings about whether you want to help this person and not, and you have to honor that as well. So I think culturally this can be very complicated depending on how your family looks at these things. But I will say what I've seen work is open communication around the expectations, right? So let's say maybe you are supporting your parents, but they're able to support you by looking after your kids, or there's some intergenerational living that you're comfortable with and you're able to save on living expenses because of that. Maybe they're able to contribute in a smaller way, but still contribute. So I think the toughest part about this is having that conversation to understand really where everybody is at and what everybody needs, and then making a plan from there. And then you can get creative and deciding what level in which you're willing to sacrifice. And it's not easy, but I've seen some awesome creative solutions around this. And I love to see people leaning on community for this too. I wish we did more of that, and finding ways to connect with other people potentially in a similar situation and supporting each other. So creating community, getting creative with solutions. But I think the very first step is truly understanding the situation. I recently was working with somebody whose parent has, they thought they were going to have to support their parent forever. Turns out their parent is living in a very expensive house in a very expensive area, right? And so they don't have any retirement, but they have this house. That's a conversation that needs to be had, right? This one person, they could move to something that would take a huge burden off everybody. I'm not saying that's easy, right? Moving someone from their home, that's hard. But if you are trying to figure out if you can retire comfortably or take care of this person, you might need to have that conversation and say, I would love to help you, but can you help me by making this change, right? So I think it all starts with getting clarity on where people are at.
Yep, absolutely. You cannot make a plan if you don't actually know what the situation is. So having those conversations, as difficult as they may be, are going to be the way that you understand what your starting point is, and you can make a much more concrete plan. Tess, I know that this conversation is going to spark people's interest. If they're not already investing, they're going to want to learn how. And if they are investing but feel very like they have a lack of confidence around it, I know they're going to want to find out more about your work and how you can help your clients. So tell us where we can find you, and if you have any resources you'd like to share.
I do. I have a favorite new resource actually that I'm so excited to share. So where you can find me is Wealth with Tess. I am on Instagram at Wealth with Tess, just one word. And my website is Wealth with Tess. But I have a free mini course called Journey to Financial Independence. And this is honestly something that I was going to make a paid product, and people really liked it. And I love that it's inspiring people to invest. So it's remaining free indefinitely. So this is a really great place to start. If we circle back to the conversation we were having before, the first steps to really starting to invest and be more aggressive with your financial future strategy is to figure out where you're at now. So this mini course, Journey to Financial Independence, will help you do some basic understanding of how money's coming in and out of your life, and help you calculate what number you'd want to end up in retirement to have that financial flexibility and independence. So it helps you with simple calculators, no math required. If you're allergic to math, this is totally going to work for you. So there's a few calculators in there that can help you figure out, if you invest this much, what's that going to grow to in the future? So if you're trying to figure out how much you should be investing for retirement, where to start, and what you need in retirement in the first place, which most of us have no idea what that is, this is really going to help. So that's Journey to Financial Independence, and that's at wealthwithtess.com/FI, and you can get free access to that.
Amazing. And we will make sure to link all of your resources in the episode show notes. Tess, thank you so much for sharing your journey and your story with us, and for really empowering us to understand that investing is not just for old white dudes. We can do it too.
Absolutely. Thank you so much for having me.
Thank you.